Hi friends, I am Parag Gupta. Today we are going to deal with May 16 solutions. Although this paper is supposed to be completed in 3 hours, I will take around 4 hours to complete this paper. Reason is pretty simple, I need to go through few concepts in detail. Unlike every attempt, in this attempt, few questions were very conceptual, so I need to go in detail. I repeat these words. And one more thing, I have no choice as you people have in examinations, so obviously I need some extra time. Now without wasting any more time, let me begin with May 16 solutions. Here is your question paper. See, let's come on to question number 1. Question 1 says, UK Limited prepared a draft proposal for next year as follows. Okay, quantity has been provided as 10,000 units. Selling price per unit 60. Variable cost, direct material, labor, variable overhead, contribution per unit, total budgeted contribution, total fixed overhead, total budgeted profit. Okay, now next thing is, the board of directors are not satisfied with this draft budget and suggested the following changes for better profit. The budgeted profit is rupees 50,000 rupees. The company should spend 57,000 on advertisement and target sale up to rupees 64 per unit. Means board of directors want to increase the profit, and for that what they are planning is, they are planning to do some extra expenditure on advertisement. Further, it is expected the sales volume will also rise in spite of price rise to 12,000 units. So what they are planning is, they are planning to increase the selling price, they are planning to increase the advertisement expenditure. They are, because of increase in selling price, they are willing to, they are saying that there is no harm to our volume. So our volume will remain stagnant. In order to achieve the extra production capacity, however, the workforce must be able to reduce the time taken to make each unit of the product. It is proposed to offer a pay and productivity deal in which the wage rate per hour is increased to rupees 8. The hourly rate for variable overhead will remain unaffected. What it is saying, that our wage rate will be now rupees 8, in long thing short, and our variable overhead will not change at all. Anyhow, and one more thing, our time required to do the production will definitely get reduced. You are required to calculate the target labor time required to achieve the target profit. So we are aware that our labor time will get reduced, but we are not aware that how many hours are required to achieve that target profit. That's what we are supposed to calculate. It's a very simple question. I will say a very simple question of revised budget. And without wasting any more time, I believe we shall go ahead to our question portion, solution part. Fine. Question 1A. Very simple question. Let us say, let our targeted hours per unit is equal to X. Now, statement showing revised budgeted profit. Statement showing revised budgeted profit. Fine. Okay. Quantity. You have been told that quantity is not going to change, means it will be 12,000 units. Further, you are provided with revised selling price, which is 64. Then what you are supposed to do? Obviously your variable cost has changed, so You need to first calculate it and then subtract that revised variable cost to arrive at our profit part, means contribution. Direct material, direct labor. We are unaware about hours, so we will write X hours at the rate rupees not 1.8, it is 8 per hour. So it will become 8x. Okay. Then variable overhead, again X hours at the rate rupees 1 per hour, it will be 1x. Total is 16 plus 9x, and our revised contribution margin per unit will be 48 minus 9x. 48 minus 9x. Now if we multiply this revised contribution per unit by total units, we will get what? Revised budgeted contribution. I deliberately write total so that you shall not get confused. And real name of contribution is obviously contribution margin, and not just contribution, but in India we follow word contribution only. That's why I am writing contribution. Now, out of this revised budgeted contribution, if I subtract total budgeted fixed overheads of 2,80,000 and advertisement of 57,000, then we will definitely arrive at what? Total revised budgeted profit, which is 12,000 into 48 minus 9x minus 3,37,000. Okay, and question has also provided us this budgeted profit. Question has provided us this figure as rupees 50,000. So obviously we will equate the two. And our X will be 1.75 hours per unit. I already told you that these figures are already pre-calculated with me, means I have already done these kind of calculations earlier beforehand, so that I shall not waste any more time on clerical things. Of course, my job is to teach only conceptual portion and not about computation portion. You can do computation on your own. You are smart enough. So I will write computations right away without wasting any time on computation. Okay. So our total target hours are 12,000 units into 1.75 is equal to 21,000 hours is equal to 21,000 hours. Let's come on to question number 1B. It's an old question, TQM question from my book. Obviously question 5A, it was also asked in November 03. That question of November 03 was of 11 marks. This question is a basic portion, means basic part of that long and lengthy question. That was a very lengthy question. This is a very small question. Anyhow, let's begin with this question and let's see what this question is all about. See, Supreme Prakashan is in business of publishing a leading newspaper which is a wide customer base. Okay, it has very wide customer base. It measures quality of service in terms of printing quality, on-time delivery, number of damaged and unsold paper. Means it is qualified quality into 3 parts. To improve its business prospects and performance, the company is considering installing and scheduling and tracking system. Means company is planning to install a scheduling and tracking system which involves an annual additional cost of rupees 3 lakh. Besides equipments costing rupees 4 lakh needed for installation of system. Means 2 costs are supposed to be incurred, one is 3 lakh and one is 4 lakh. Okay, one is for installation, another one is for this machine itself. To purchase the equipment, company is planning to utilize the proceeds of investment fetching an annual income of 9%. Okay, means that's a kind of opportunity cost, because if we will invest that money in this equipment, we cannot earn that 9%. So obviously this is a kind of opportunity cost. Details regarding the present and future performance are given as under. You have been provided about present and future performance, means before and after. Present and future. On-time delivery, variable cost of newspaper damaged and sold, fixed cost, number of newspapers damaged and sold. Then it is expected that each percentage increase in on-time performance will result in revenue increase of 36,000 per annum. Means if you are delivering on time, newspaper on time, then your revenue will also increase by rupees 36,000. Required contribution margin is 40%. Means whatever contribution margin is desired, it is 40%. You desire a contribution margin of 40%. Should Suchita Prakashan, or rather Supreme Prakashan, install the new system? That's the question. Very simple question. Let's begin with the solution. Statement showing, obviously what you need to do, you need to check the economics. So what we will do is, we will write this only, economics of proposition. Okay, now let us begin with relevant revenue side. What will be your additional contribution? That's the main question. What will be your additional contribution out of it? You will say, sir, 36,000, 12 times into 40% is desired contribution margin. So your figure will be 172,800. 172,800. Relevant costs. Relevant cost. First relevant cost is additional cost of installing. First relevant cost is additional cost of installing. Installing what? Let us write that as well. A scheduling, whatever you want to say, and tracking system, rupees 3 lakh. Income foregone. If you remember, I told you some income will be foregone. How much? How much income will be foregone? See, 4 lakh into 9%, because you were earning some interest at other place. Okay. Further, one more thing will be there. There will be some savings in variable cost. Let me show you. See, you will say, sir, earlier 6,000 units were sold, means damaged, sorry. Now only 1,000 units will be damaged. Total cost of production for 6,000 units was 6,000 into 40. Now it will be 1,000 into 40. So difference is our saving, because damage is less in comparison to earlier. Due to fear damage, you will say obviously saving in variable cost. Net benefit is of 36,800. Net benefit is of 36,800. Got it? Let's proceed for question 1C. I know some people might say that sir is a bit fast. In class you usually teach at a very slow speed, guiding each and everything. See, in this question was very simple. There was nothing as such I need to explain. So I don't think I need to waste any time in that explanation portion. Yes, wherever I feel that you require some special efforts, I will definitely go ahead and explain you in detail. But I don't think at this point of time there is any need for any detailed explanation. Wherever I will require, I will definitely guide you. And there will be definitely a slight difference in classes, normal classes, and this paper, because this paper is supposed to be finished in 3-4 hours only and not in 20 hours. I am supposed to guide you, not detailed explanation shall be provided for everything. It is assumed that you are a smart kid right now. Let us begin with question 1C. A company is considering 3 alternative proposals for conveyance facility for its sales personnel who have to do considerable traveling. Okay, there are some sales personnel and they are traveling a lot, approximately 20,000 kilometers every hour. Okay, the proposals are as follows. There are 3 proposals. 3 proposals are there, and we need to evaluate all three proposals. Purchase and maintain its own fleet of car. Company is thinking, let's purchase a car. Average cost of car will be rupees 1 lakh. The cost of car will be, it will cost us rupees 1 lakh. Allow the executive to use his car and reimburse expenses at a rate of rupees 1.6 per kilometer and also bear the insurance cost. Okay, means you will say, we are ready to bear the insurance cost, we are ready to reimburse the expenditure 1.6 per kilometer. You tell to your executives that you use your own car, we will not provide you any vehicle. And third, hire cars from an agency at rupees 20,000 per year per car. You can hire car from agency and cost value 20,000 per annum. The company will have to bear cost of petrol, taxes and tires. Now, cost of petrol, taxes and tires will be borne by company. Okay, means taxi renting or cab renting, something like that. The following further details are available. Petrol cost is rupees 1.6 per kilometer, repair and maintenance 0.2 per kilometer, tire 0.2 per kilometer, insurance 1200 per car per annum, taxes rupees 800 per car per annum. Life of car, obviously it will be considered only in our case in a situation when we own the car. Life of car is 5 years with annual mileage of 20,000. Okay, 20,000 kilometers is your annual mileage. Last, resale value. Resale value means this 1 lakh is the purchase price and at the end it will be sold for rupees 20,000. Obviously net cost to be borne by you is 80,000 ultimately. Okay, and 80,000 is your cost, total cost. Work out the relevant cost for three proposals and rank them. So what you can do is either take 80,000 for 4 years or for 5 years, or you can take 16,000 for each year, because we can do one thing, we can calculate it for 1 year, and for evaluating all three proposals we can take yearly basis. So in that situation we need to take only depreciation. That's not a question of any relevant cost. It's a very simple question, basic question, concepts of relevant cost. We need to just check that which proposal is more beneficial, and need to evaluate all three proposals. Let us start with this question at a very good pace. See, statement showing relevant costs under three proposals. Statement showing relevant costs in the three proposals. What are the three proposals? First is you own the car. Second is executive's car is being used. And third is you take a car on rent. Let us jot down the expenditures. Petrol expenses were provided to you 12,000. How come? See, you are aware this petrol rate is 0.6 per kilometer and 20,000 kilometers is the total fleet per annum. Sorry, it will be 12,000. Next expenditure is repair and maintenance. $4,000. Then comes tires, Be careful in choosing what expenditure is supposed to come under what head, who is in what situation company will bear the expenditure. For example, in situation of executives car, we are not supposed to bear the tires expenditure. Reimbursement expenditure, we will reimburse on the basis of 1.6 kilometer per rupees per kilometer, means 32,000. Insurance costs, then taxes, then higher charges, and last is depreciation. Total comes to there is nothing as such about relevant costing concepts or relevant costing to be used here. It is simply evaluation of 3 proposals, nothing more than that. You just need to go through that what cost is supposed, it's a kind of revised budgeted question, that what expenditure is supposed to be allocated to which particular situation, and whether we shall follow this situation, that situation, or another one. Got it? Anyhow, let's rank it. First, second, and third. You can definitely do this question on the basis of cost per kilometer as well. Means I had done it in totality for 1 year. You can definitely do it for 5 years, means total life of the company or the machine of car. You can definitely do it on the basis of cost per kilometer. It's your choice. I did it in this way. Anyhow, let's come on to next question, 1D. A very simple question of optimality test, basics of optimality test. You just need to check that whether the solution is optimal or not, and is there any other solution, optimal solution available or not. A very, very simple question, pure basic question. Let's see what this question is all about. The cost per unit of transporting goods from factories X, Y, and Z to destinations A, B, and C, A, B, C, and D. The quantities demanded and supply are given. Okay, supply, demand. Answer the following questions with reason taking U3 as 0. In UV matrix, it clearly specified that you are supposed to take U3 as 0. You cannot choose any one, any U or I, UI or VJ at your own choice. It has clearly mentioned that you are supposed to take only U3 as 0. While calculating UI and VJs, is the solution optimal? You are supposed to tell whether this solution is optimal or not. Obviously, if there is any delta Ij which is 0 or negative, the solution is not optimal. If yes, can there be an alternative optimum solution? Yes. If there is a 0 delta Ij, obviously we will say that because 0 delta Ij designates that neither cost is increasing nor cost is decreasing, so obviously there will be any other alternative solution, because if we place any particular unit at that delta Ij cell, our cost will remain unchanged. So obviously there is an alternative optimal solution. Let us go through this particular question. destinations and factories. Let me copy it from your book, means the question paper. Let's begin with it. First apply WAM and then optimality test, so that we can test the allocations. Let's do the allocations. Let's find the differences both for rows as well as columns. It will be 5, 20, 10. Here it will be 5, 10 and 40, 30, 5, 20, 25. Okay, it will be 15. These are our differences. Fine. Highest difference is 30, least cost is 10. We will allocate maximum units, which are 100. So this will remain 100, this will become 0. Next is our, because column B has 0 units, so we need to find the differences again. Obviously differences of bottom side will not change, and only differences on our right hand side will change. Differences of our right hand side will change. This will become 5, 20 and 5. Highest difference is 20, least cost is 10. We will allocate 50 units at this place. Okay. Again, differences for bottom will remain unchanged, and only differences of a right side will get changed. Let us write them again. 5, 5. On your right they will become 5, 5 and 5. Means differences are matching. Let's see which difference, means all differences are 5 obviously. Which difference 5, which of these 5 values contains the least cost? You can find there are 2 least costs, 20s. There are 2 20s. You can allocate at any of them, but priority will be given to that cell where maximum units can be exhausted. Coincidentally, both these cells will have equal exhaustion of units. Means 100 units can be exhausted at this place as well as this place. Okay, so what shall we do? We can again, at our whimsy we can choose any of them, but we primarily choose upper side. It's not any particular rule, it's a rule of thumb. You can definitely go for this 20 as well, but I prefer to go above 1. Fine, 100. Okay, just a second, let me check. I think okay, values are second correct. So this will become 50. Now this becomes this becomes 0. This way our values on the right side will get changed. This will become 5 and 5, means this value will not be there, and bottom will also get changed. Here it will be 10 and 10. Highest difference is 10, obviously at 2 places. Least cost among these two 10s is 20. We will allocate maximum policyable units at this place, which are, that is 100. So this becomes 0, this becomes 150. Obviously, since there is only one row and because only one row is available, we will allocate directly. Figures will be 150, 50. This will become 0, this will become 0, and this will become 0. So that's our allocation. Let's check that whether this allocation is optimum or not. How do we know about this optimality? We need to perform the optimality test. Optimality test means UV matrix and delta Ig matrix. We need to remember one thing. Question has specifically said that we are supposed to take only U3 as 0 or something. Question has given it. Okay. For all allocations, let's write down the values of the cost for those cells. If I take U3 as 0, obviously this will become 20 and this will become 10. On the basis of this 20, I can find value of this, it will be 10. On the basis of this 10, we can find value of this 25 and 0, and on this 25 it will be minus 5. This is our UV matrix. Let's come on to delta Ig matrix. Delta Ig matrix, how do we use delta Ig matrix? Obviously, we take cost cells of unallocated cells minus Ui plus Vj of those unallocated cells. So this value will become 10. Got it? Here it will be 45, 30, 20, 0 and 35. Some people calculate delta Ij and UV matrix using some equations, and some people do it in other ways by following other ways. I will not say that you cannot follow them. You are definitely at your wish to follow even those methods to find the values of all delta Ijs. Even those methods are totally correct. I will not say that those are not to be followed. Those are totally correct, but obviously they are a bit harder. So I would suggest you to go only by this way. Even study material and suggested answers go by this way only. Anyhow, first question was whether this solution is optimum or not. Obviously this is optimum because all delta Ijs are either 0 or positive. Either positive or 0, hence solution is optimal solution. Since delta Cj, now second question was, is there any other optimal solution is available? Obviously there is one more solution, because delta Cj is 0, hence this value, hence it is an alternate not a good line. Let me prefer another line for this. Hence alternate optimal solution is available. Let us come on to question second A. Again a question of TQM, very simple question. Earlier was not of TQM. Earlier was of TQM, no. Earlier was, I forgot. I think it was budgeting. I forgot that question, which we dealt earlier. Anyhow, this question is ditto copy of question 17 of TQM of my book, and again this question is a copy of past question, examination question. Let us start with this question, a very simple question, a little bit tricky one, so you need to be very cautious while doing this question. Although it is very simple, but it is a bit tricky, so you need to be very cautious. Let's see what this question is all about. Got it? A company produces and sells a single product. The cost data per unit for year 2017 is predicted as below. Per unit, direct material, direct labor, variable overhead, selling price. The company has forecast that demand for the product during the year 2017 will be 28,000 units. Okay. However, to satisfy this level of demand, production quantity will be increased. Okay. There are no opening or closing stock. The stock level at material remains unchanged throughout the period. Okay. Means, do you understand about this line? Just a second. This line says, to fulfill the demand, we are increasing the sales production quantity, means there is some failure, because of which we are producing extra. That's the point. Got it? The following additional information regarding cost and revenue are given. What are the information provided? 12.5% of the items delivered to customers will be rejected due to specification failure. As I already told you, means they will not meet the specification failure and will be returned by the customers, and will require pre-replacement, and we need to replace them. The cost of delivering the replacement item is ₹5 per unit. Okay, it will be our cost. 20% of items produced will be discovered faulty at inspection stage. They are delivered to the customer. Before they are delivered to the customer, means there are two kind of cost provided to us. First is replacement cost, means warranty replacement. Second one is internal failure cost. We found these items as defective during our inspection stage only. 10% of direct material will be scrapped due to damage while in storage. Material got damaged due to some bad handling. Due to above, total quality cost for the year is expected to be this. Total cost of quality has been provided to us. The company is now considering the following proposal, to introduce training programs for workers, which the management of the company believes will reduce the level of faulty production to 10%. Okay. So our faulty production is right now 20%, I think, and it will get reduced by 10% and will reach to 10%. The training program will cost rupees 4,50,000. Okay. To avail the service of quality control consultants at an annual charges of rupees 50,000. Second is we can avail some quality control cost can be incurred, 50,000 will be cost, consultant will come, okay, which would reduce the percentage of faulty items delivered to the customer to 9.5%. Means warranty replacement will get reduced because of this consultancy. You are required to prepare a statement of expected quality cost of company. Let me repeat it. Prepare a statement of expected quality costs the company would incur if it accepts the proposal. If, let us say, you accept the proposal, what will be your expected quality cost? That's the question. Costs are to be calculated using 4 recognized quality cost heads. You know that. Prevention, appraisal, internal failure, external failure. You need to qualify cost in all 4 heads. Would you recommend the proposal? Give financial and non-financial reasons. You are not just supposed to provide only financial reasons, that financially because of profit or loss we shall accept this proposal or we shall not accept this proposal. Rather, we shall also consider non-financial considerations. Let us begin with this question. It's a simple question but a little tricky one. Before TQM means before proposal and after TQM. Here proposal is regarding TQM. Total demand (28,000 units). Okay. Let us add return replacement due to specification failure. See, we are aware that warranty claims will be there. Let us come to know that how many units are required to be produced to arrive at this final demand, means the demand which we have satisfied. Obviously, you must have dispatched high number of units, produced and dispatched, and because customers has returned some items and we need to provide the replacement, so higher number of dispatch will be there. Obviously, you will say, sir, think in this way. What has been provided to us is, say we dispatched 100 units, 12.5 units were faulty, 12.5 and customer received 87.5. So we need to arrive at this figure. How do we arrive at this? Sir, very easy. How come? 12.5 upon 87.5 into 28,000. Okay, now let us add them. Oh, great. Very simple. Really very simple. Same goes here. Here percentage was decreased to 9.5. So this figure will be 32,000 units and 30,939 units. Let's add back faulty production. Do you remember we caught some faulty production during our inspection stage? Let's add it back. Means obviously you must have produced more items, and due to inspection you caught them and you dispatched few number of items than you produced. So if you will add them, you will come to know units produced. Pre-inspection. Units produced pre-inspection. Same way, 20 upon 80 into 32,000, 10 upon 90 into 3939. This figure is 8,000 units and this is 3438 units. Total comes to 40,000 units, 34,377 units. Okay, now question is, how much raw material cost have you incurred? You will say at the rate 35, so it will be rupees 14 lakh and 12 lakh 3,195. Scrap debt storage space, because there was some damage, if you remember. You will say our total raw material cost is 15,56,556 and 13,36,883. Now let us come on to solution. This part was done just to understand the question better. Statement showing expected quality cost. Before TQM, and after TQM. Before TQM and after TQM. First cost is prevention cost. First cost is prevention cost. Quality training, it was provided to you. What was the cost? 4,50,000 in point 1. In point 2, quality control consultant, it is again prevention cost. What was the cost? 50,000. What was the cost? 50,000. It is a kind of quality improvement cost. So this is prevention cost. Occasionally, CA Institute suggested answer commits this error. Means they are confused on certain points in TQM. You will find certain suggested answers, they take same cost at a particular in a particular question as prevention, and in another question without any difference, without any special condition. The error they commit is they take same cost as appraisal cost. In this question as well, they committed the same error. I think they took it as appraisal cost, although this cost is prevention cost. In another question, you will find that they must have taken this similar cost, same cost only, rather similar, not similar, as prevention cost. So they are confused on certain things in certain concepts on TQM. You are supposed to take it as prevention only, you are not supposed to take it as appraisal. Make sure of that. Here in this question, there is no appraisal cost. Internal failure cost. Now you already calculated number of units of internal failure. You just need to multiply it by cost. $8,000 in first case means before TQM. Now cost is 35, 25 and 15. See carefully, 3 costs will be incurred because we are supposed to calculate total cost. So what 3 costs will be? 35, 25 and 15. Here total cost will become 6 lakh and 2,57,850. 6 lakh and 2,57,850. Another cost is cost of raw material scrapped. If you remember, raw material was damaged due to bad handling. So even that is your internal failure cost. Even that will be added here. And total of your internal failure cost is this. Now let us come on to external failure cost. Let us come on to external failure cost. Warranty. Warranty claim means customer returns are kind of external failure cost. But do you remember there was some extra cost of 5 rupees for this warranty return replacement cost? So in this 35, 25 and 15 you need to add what? 5. Your figures will be let us come on to total. A plus B plus C plus D. Here it is 10 lakh. Something 11,26,658. Okay, let me go on to B part. We were supposed to calculate additional cost of quality and to evaluate on both financial as well as non-financial considerations. Let us write this answer. See, obviously we must not apply TQM. Reason is our cost will increase. This is financial grounds. But think in this way, it may also be possible that after applying TQM your market share will increase, because some people might advertise mouth to mouth publicity, or certain kind of publicity will happen automatically that your products is of wonderful quality. Your products are of wonderful quality and people start buying your product more in comparison to earlier. So in that kind of situation, if that kind of certain future situations are to be considered, then you will say that TQM shall be implemented. So we will write it in dicey manner. In financial consideration we will write that we shall not implement it considering our current situation, and for future situation we can write that of course we can implement TQM. Let's write it. There is additional cost of quality of rupees 51102, matlab 51,102. How come? 11,26,658 minus 10,75,556. Hence, on financial grounds, TQM is not advisable, but certain non-financial grounds such as increased customer faith on our products quality may help in increasing market share hence TQM can be advisable. Hence TQM can be एडवाइजेबल। क्वेश्चन 2b पे आ जाते हैं। लेट अस कम ऑन टू क्वेश्चन 2b। This question is again same question, word to word copy of question 37 of my book, Miscellaneous Theory chapter 11th edition. Ditto word to word question. Let's do this question. A company manufactures a product Y in addition to other products by using same machine in department A and department B. Okay. The usage details are, okay, per unit of product Y. There are two departments, usage, rate, both have been provided to us. Material, labor, 8 kg, 4 rupee per kg, and same is for hours. Basis of overhead recovery are given below, means overhead recovery rates are provided to you. Department A, per rupee of direct material, carefully read it, per rupee of direct material, and here department B, per direct labor hour. Allocation base is different. Variable overhead has been provided as 0.8 and 2.2, 2 and 3. Value of plant and machine in department A is 22 lakh and department B is 18 lakh. Means total is 40 lakh. Please see it carefully. Here it was written at the top of question, first line, Y in addition to other products by the same machines in department A and B. This 40 lakh is not only for this particular product Y, rather these machines are supposed to be used on other products as well. Means we need to allocate our expense of this 40 lakh or whatever percentage of profit or cost, whatever it is, on this product Y according to usage. We cannot say that this 40 lakh is solely for this product Y. It is being used, these machines are being used for other products as well. Let me continue now. Working capital requirement for product Y based on target volume of 2000 units per month is estimated at rupees 2,72,800 per annum, which is 40% of potential capacity. Please think again, please read it again. Here working capital is only of Y, first thing, 2000 units per month, 272,800 per annum, capacity utilization 40%. There are some things to be considered very carefully. For example, per month, per annum, these things shall be read very carefully. Required, calculate selling price of product Y to ensure contribution equivalent to 25% of investment made. Means return of investment is supposed to be 25%. There are two kind of investments here. One is working capital investment and second one is fixed capital investment. So we need to take 25% as return. Means first we need to go for variable cost, then contribution return, because contribution return has been provided, so you need to add it to variable cost, so to arrive at revenue. If profit would have been provided, then you are supposed to calculate first total cost, and then you were supposed to add profit to arrive at revenue. Anyhow, let us begin with part 1, then we will come on to part 2 and part 3. Let's first find out variable cost, department A. Material 8 kgs at rupees 4 per kg. Labor 2 hours at rupees 14 per hour. Variable overhead, be careful, Before calculating variable overhead, let us find 32. This is 28. Now this 32 into 0.8. Remember, I told you how come? Because department A's variable overhead was at rupee of material. So you will say 0.8 into rupees 32. 25.6. 25.6. You are not supposed to write red lines in examination. It is just for your reference. Total is 85.6. Now let me come on to department B. Material, four kgs at rupees 6 per kg, 24. Labor, 3 hours at rupees 12 per hour, 36. Variable overhead, 3 hours at rupees 2 per hour, 6 rupee. So let us calculate total variable cost. 85.6 in department A, 66 in department B. So total variable cost is 161. Wrong. 151, not 61. 151.6. This is your variable cost per unit. Let us come on to working note 2. Let us start with fixed capital employed first. Your fixed capital employed means machinery, plant. Fixed capital employed was rupees 22 lakh plus rupees 18 lakh is equal to rupees 40 lakh. What is fixed capital employed? Plant and machinery. Fine. Now you were provided the desired contribution return is 25%. Desired contribution return on fixed capital, 25% of 40 lakh, rupees 10 lakh. Further, because this contribution, this desired contribution is not only of product Y, because fixed capital is not only of product Y, plant and machinery was supposed to be utilized for other products as well. So we need to first calculate that how much of this desired contribution is supposed to be allocated to product Y. You are aware that 40% is the potential capacity which is being utilized of plant and machinery which is being utilized for product Y. So let us multiply this by 40%. Share of desired contribution of fixed capital on Y. Got it? Now, because we have calculated variable cost as per unit, we are supposed to, we already know that this much amount of contribution is desired on fixed capital. for product Y. Now we need to first calculate per unit contribution. Let's find it. Total output of Y per annum, 2000 units per month into 12 months means 24,000 units, means 24,000 units per annum. Therefore, contribution return on fixed capital apportioned for per unit of Y. It is rupees 4 lakh divided by 24,000 units. Figure comes to rupees 16.67 per unit. Rupees 16.67 per unit. Working capital on Y. Now let us come on to what working capital portion. First capital was fixed capital, second is variable capital or working capital, by whatever name you want to call, you can call. This was working capital, it has been provided to you in question. Now let us, this working capital was solely of product Y, so we will simply multiply it by 40% and divide it by number of units to arrive at per unit contribution. It's very simple now. Therefore, desired return on working capital is equal to 272,800. Figure is 68,200. Now your contribution return on working capital apportioned for per unit of Y is equal to 68,200 divided by 24,000 is equal to 2.84 per unit. Solution. Very simple. Price, we were supposed to calculate the price. What is price of product Y? First we will take variable cost per unit, then we will add contribution return on capital. Which capital? Both fixed and variable. Capital employed, let us make it capital employed. So this figure will be 151.6. How come? Working note 1. Then rupees 16.67, working note 2. 2.84 working note 3. Total comes to 171.11. We can alternatively calculate this contribution per unit of 16.67 by first calculating contribution per rupee of material. This was an alternative way. It is your choice, means some people say, sir, can we do this way, that way? Yes, of course you can do that way as well. Means first calculate contribution per rupee of material, then on the basis of that material, that contribution per rupee, you can calculate this figure. That there is nothing wrong in that. Got it? Now let us come on to question number, in this question part 2 and part 3. Part 2 and part 3. Part 2 says, if product Y is a new product about to be launched in market, okay, on what basis should the price be fixed and what would be the minimum price? Okay, what would be the minimum price? You will say, we will follow penetration pricing strategy and we shall use variable or say relevant cost. That's what we shall charge, or even in certain situations to penetrate the market, we charge even lesser than relevant cost. Relevant cost is charged so that we shall not be in worse of situation, but of course to start our new product you can definitely go for even lesser amount of value, means lesser selling price. If product Y is a well established product, what should be the basis for price fixing and what would be the minimum price? Okay, if it is a well established, then definitely along with relevant cost you will charge your markup as well. So it will be cost plus markup. Let me write it for you, although there is no need to write, but still let me write it for you. Second part, if product is to be first time launched in market, then penetration pricing strategy shall be followed, and we shall charge either variable or relevant cost, that is rupees 151.6, or sometimes even less than variable slash relevant cost, depending upon market situations. In third part, if product is well established in market, then we will charge total cost. While explaining, I erroneously said very relevant cost. Rather, we shall charge total cost plus reasonable mark, that is variable cost per unit rupees 151.6, fixed cost per unit rupees 79.4. How come? 2.20 into 32 plus 3 hours total is 231 plus a reasonable marker. Let us now proceed to question number 3a. See, transfer pricing question. Again the same question of what like we did in question 14. Same question, exactly word to word question. Not exactly word to word, similar question. Then question 14 of your TP of 11th edition. Let's read this question. Division X and Y are two divisions of X and Y Limited, which operates as profit center. Division X makes and sells product Y, product X. The budgeted income statement for division X based on sales volume of 30,000 units is given below. You have been provided that sales volume is 30,000 units and this has been information of income statement. Budgeted income statement for division X is particulars rupees in thousand, sales revenue, component purchase cost, other variable cost, fixed cost, variable marketing cost, fixed marketing cost, operating profit. The manager of division X suggests that sales can be increased by 9,600 units if selling price is reduced by rupees 20 per unit from the present price of 200 per unit, and that for this additional volume no additional fixed cost will be incurred. Okay, you have been provided that we can increase the sales by 9,600 units, but we need to reduce our selling price by 20 rupees. Okay, means our new selling price will be 180 and no additional fixed cost will be there. Division Y makes a component Y which is sold outside at a price of rupees 50. We are aware that division Y makes a component which is being sold to outside market at rupees 50 per unit. Division X presently uses a component which is purchased from outside at rupees 35 per unit. Division X purchases a component which is costing it 35 and the similar component is being sold by division Y in outside market. Okay, this component is similar to the component made by division Y. I told you division Y can make this component for division X with a minor modification in specification which could cause reduction in direct material cost for the division by rupees 1.5 per unit and would require extra labor hours of rupees 1 per unit at a rate of rupees 15 per hour. Means there will be some modification because of which some cost will get changed. We will analyze what will be the change in cost. Okay, further, division Y will not incur variable selling marketing cost on units transferred to division Y. There will not be any variable internal transfer. There will not be any variable selling cost. Division Y X manager has offered to buy component from division Y at rupees 25. Division X says, give me this component which you are selling in market at rupees 25. Division Y has a capacity to produce 85,000 units. The current budgeted information of division Y are as follows. It can sell 85,000 units. He is selling currently, division Y is selling 60,000 units in outside market at rupees 50. Means it still has 25,000 units of balance capacity. Variable cost including material and labor is rupees 15 per unit. Variable marketing cost is rupees 3. Operating profit 12 lakh and fixed overhead is 7 lakh 20,000. What we need to advise? There are two questions. Should division X reduce the selling price by 20 rupees per unit even if it is not able to procure the component from division Y at rupees 25 per unit? whether we shall reduce the selling price by 20. Okay. And second, should the division Y be willing to supply 39,600 units to division X at rupees 25 per unit? Okay. Support each of your calculation with appropriate calculation. We need to conclude in both these cases, and remember, there is nothing as such written that we are supposed to take only division X views, division Y views, or company's views. So in case there is a conflict between division Y view and company view, then we will definitely write both the views so that examiners shall understand what we are thinking. Got it? What is best way to present this question is we shall write all possible views. Let me proceed with the solution. Let us first come on to division X. Let's calculate variable cost per unit for division X, and let us check whether it is beneficial to sell at reduced selling price. Division X, variable cost per unit, component, rupees 35, other production costs, rupees 1680 divided by 30. We are calculating per unit cost, that's why we are dividing by 30. Rupees 56, then marketing, rupees 9. Our total comes to rupees 100. Now your present selling price is what? Rupees 200. Am I correct? Yes. So obviously your present contribution per unit will be rupees 100. Present sales in units, $30,000. If we multiply this sales unit with present contribution per unit, we will get total present contribution $30 lakh. Got it? Now let us come on to proposed selling price, proposed figures. Let us come on to those figures. Proposed selling price is 180. How come? 200 minus 20. So obviously proposed contribution per unit will be G is equal to F minus A, rupees 80. Proposed sales volume in units is 39,600, means units were increased from 30,000 to 39,600. So obviously total proposed contribution rupees 31,68,000, and we can of course very easily find what is our additional contribution, which is rupees 1,68,000. Let us write the conclusion. It is beneficial to reduce selling price by rupees 20 even if component is procured from outside. Higher price. ठीक है. Now let's come to part B. Let us come on to part number B. It is very easy. We need to tell that whether 39,600 units shall be transferred or not. Out of those 39,600, we are already aware that 25,000 units is balance capacity. So there will not be any kind of any opportunity cost on those 25,000 units. We are just supposed to calculate opportunity cost on remaining 14,600 units. What we are supposed to do? Calculate variable cost plus opportunity cost on total 39,600, and then we will divide by the total figure by 39,600. Whatever is the price, we will say, we will evaluate and write the conclusion. Let's do it very fast. Capacity is of 85,000 units. Units sold outside 60,000 units. Balance capacity (25,000 units). Units required by X 39,600. Now let's see. Total variable cost is 39,600 at the rate 15, 5,94,000, and opportunity or opportunity, whatever way you can pronounce it, 25,000 units at the rate nil, plus for remaining 14,600 your opportunity cost will be 50. 50 was external selling price and your cost was 15 plus 3, so total is 4,67,200. Total transfer price for 39,600 units, 10,61,200. Minimum transfer price $26.80. Conclusion. C. He was asking for 25 rupees. Obviously, you will say that at 25, because his minimum cost is, relevant cost is 26, he will reject. The department Y will say, I will not supply, because department, I think X or Y can means whatever name it is, department, supplying department will reject. But from company's point of view, it is a very beneficial situation, because if the purchasing department purchases it from outside, it will cost 8 rupees 35. But if supplying division supplies it at 26 or 25, whatever, if it supplies at 25, I agree that supplying division will incur a loss, but company as a whole will be in beneficial situation. So we will write this thing only, that for company as a whole it is a beneficial situation, but for supplying division it is not a beneficial situation. Let's write it. At TP of rupees 25, division Y shall transfer maximum 25,000 units, although from companies point, let's write it, company as a whole. Company as a whole perspective, whole 39,600 units shall be transferred as there is saving of rupees 8.20 per unit. Got it? Let us come on to question number 3B. This question is a lovely question. It means I must say that this has been asked at least 5 to 6 times in examination, past recent examination, and this is a favorite of examiner. I told students several times that do this question, because this is a very simple question, and it is of course in my book, question 27, page 201, but it's a lovely question, simple question of EOQ, etc. Let's do it. Let's read it very fast. A company is engaged in manufacturing 2 products M and N. You are engaged in manufacturing 2 products M and N. Product M uses 1 unit of component P and 2 units of component Q. Okay. Product N uses 2 units of component P, 1 unit of component Q and 2 units of component R. There is one more component. Component R is assembled in factory, uses 1 unit of component Q. Means you are saying that there are 3 components, there are 2 products. One component is required for production of another component, assembling of another component. Component P and Q are purchased from market. Component R is not purchased from market because it is what we usually do is we purchase component Q and assemble it and reframe it as component R. The company has prepared the following forecast of sales and inventory for the next year. This has been provided: sales at the end, opening stock, closing stock, opening stock. Then the production of both the products and assembling of the component will be spread out uniformly throughout the year. It's a budgeting question, and uniformly it will be spread. Production and sales. The company at present orders its inventory of P and Q in quantities equivalent to 3 months production. Currently, our order quantity is equivalent to 3 months production. The company has compiled the following data relating to 2 components: P and Q: price per unit, cost price, ordering cost, carrying cost. Prepare a budget of production and requirement of component for next year. Suggest the optimum order quantity for P and Q. Let's do it. Very simple, very fast. Production budget. It's the first part. Sales 80,000, 1,50,000. Closing stock 10,000, 20,000. Opening stock 30,000, 50,000. $60,000 and 1,20,000. Now let us calculate component requirement budget. Components. There are 3 components. What are they? P, Q and R. Product M, product N. We are aware that 1 and 2 is the ratio in which they will be utilized. R will not be utilized. Here is the situation: 2, 1, 2. Okay. Total is 3 lakh, 4 lakh 80 and 2 lakh 40. The main thing to be considered here is component R require component Q to production for production to produce itself, and because it is a component requirement budget, we have calculated this figure. If it were have been component purchase budget, then this 240 should not be shown as total, because product component R is not purchased, it is just assembled. B part EOQ. Everybody knows about the formula of EOQ. EOQ, let us apply. The figures are these. Very simple question. Let us come on to question 4a. See, this is a similar question similar to question 35 of my book, 11th edition, standard costing. Let us read this question. Let's see what this question is all about. A company operates a standard costing system to control variable work cost of its only product. The following are the details of actual production costs and variances for November 2015. These are some details: production and cost, material, labor, variable overhead. Cost variances. Some variances have been provided. Obviously, because some variances have been provided, we need to first evaluate anything. Our first step is to go through and target these variances only, because they will provide us some values. Because examiner is not a stupid. Why would he provide these variances? Obviously, he has given us some hints in these variances. The cost accountant finds that original standard cost data for product is missing from the cost department files. The variance analysis for December 2015 is held up for the want of this data. You are required to calculate. Fine. What you are supposed to calculate? Standards. There are 5 things which we are supposed to calculate: standard price of material, standard quantity of per unit of output, standard rate of labor, standard time for actual production, standard variable overhead rate. Fine. Let us begin with this question. Very simple question. Let us take one by one. Let me first target material price variance. What's its formula is all about? See, standard price minus actual price into actual quantity. Let's open them. Let's open the brackets. Standard price into actual quantity minus actual cost of material. Actual price into actual quantity, what is that? Actual cost of material. 5,000 favorable. Standard price into 1,05,000 kgs minus 5,20,000. Standard price per kg. ₹5 per kg. We got our first answer. Second is standard quantity. Let's see. For quantity, I believe material usage variance will be helpful for us. Material usage variance. It's a very simple question. All variances have been provided to us. We just need to evaluate. We just need to open the formulas of all the variances, and believe me, answer is at our fingertips. Standard quantity for actual output into this. So you will arrive at standard quantity for actual output 1 lakh kgs. 1 lakh kgs. But we were supposed to calculate standard quantity per unit, not for total output. Standard quantity per unit of actual output 1 lakh kgs upon 10,000 units, 10 kgs per unit. 10 kgs per unit. Labor rate variance. Standard rate minus actual rate. We are supposed to calculate what? Standard rate. So obviously rate variance will help. Standard rate per hour minus actual rate per hour into actual hours. Let's open the brackets so that we can use the values provided in the question. 15,500 adverse standard rate per hour into actual hours minus actual labor cost. So this becomes standard rate per hour into 19,500 minus 3,08,000 minus 3,08,000. Standard rate per hour will arrive at, it will be 15 per hour. It will be 15 per hour. Next we are supposed to calculate what? Standard hours for actual production. Obviously efficiency variance, labor efficiency variance. Standard hours minus actual hours into standard rate per hour. 7500 favorable minus is equal to standard hours minus 19500 into 15. Standard hours for actual production 20,000 hours. Standard hours for actual production 20,000 hours. Total variable overhead variance. Total variable overhead variance. Standard variable overhead cost for actual output minus actual variable overhead minus actual variable overhead. So this will be 10,000 words. We are supposed to calculate standard hours for standard not standard variable overhead cost. Actually we are supposed to calculate standard variable overhead rate. So obviously we need standard variable overhead cost. So first we will find standard variable overhead for actual output. Standard variable overhead for actual output minus rupees 4,10,000. Figure is 4 lakh. So standard variable overhead rate per hour standard variable overhead cost for actual output upon standard hours for actual output. Four lakh divided by 20,000 hours. Just if you remember the formulas properly, believe me, this question was a very simple question. It was just test of your memory, nothing else. If your memory is good, you have crammed the formulas properly, you have understood the formula properly, you know how to apply them, you can find these variances in just 5 minutes, nothing more than that. Anyhow, let me proceed for question 4b. Let us come on to question 4b. PERT question, very simple, not PERT, project updation question. Again the same question, question 54, page, I don't remember the page, it's of 11th edition, it's an past examination question, very simple question, but you need to concentrate very carefully to update the network, because generally students commit error in updation only. See, after 15 days of working, means we are not standing on day 1, we are standing on day 15. After 15, completion of day 15, following progress is noted for the network of an erection job. Activity 1, 2, 3, 1, 2, 1-2, 1-3 and 1-4 completed as per original schedule. Means 1, this and these. These activities completed in 9 days, 6 days and 10 days. Okay. Then it says activity 2-4, means we are talking about this activity, is in progress and will be completed in 3 more days. It is in progress. We are standing at day 15 and it is still requiring 3 more days. So you will say 9 days are already passed. We are standing at day 15, means in between 6 days were there. Okay. And 3 more days are required. What I mean to say, 6 plus 3, 9. This activity requires how many days? 9 days. How come? You are saying we are standing at 15 days, 3 more days are required and 9 days were required for activity 1-2. So obviously this activity require 9 more days. 9 days to complete, not more days. Activity 3-6 is in progress. This activity is in progress. Okay. And will need 18 more days for completion. We are standing at 15. We are standing at how many days? 15. We require 18 more days and this activity already took 10 days. So how many days are required for this activity? 23. Very simple question. Wonderful question. Activity 6-7 appears to present some problem and its new estimated time of completion is 12 days. This is of 12 days. No issue. Activity 6-8 can be completed in 5 days. Okay. Instead of 7, it will take 5 days. Okay. All other activities are of same duration. For example, this will be of 20, this will be of 18, this will be of 8 and this will be of 6. Network has been updated. Simple. You are required to update the above diagram after 15 days of the start of work based on assumption given above. Very simple question. 2 minutes question, nothing more than that. It's a free, 8 marks are just for your knowledge, just for interpreting the question properly, nothing else. If you can interpret it properly, you can understand the lines of the question, you will get 8 marks in 2 minutes. Write down the critical path with total project duration. You are also supposed to write down all critical path and total duration. Let us do this question. First, let me draw that network again, updated network. See, that's the network, updated network. What we are supposed to do next? Write all paths and duration and find the critical path, nothing else. Second part is your paths are 1, 2, 5, 7, 8. Duration is 41. You can calculate it very easily. 1, 2, 4, 7, 8. Duration 44. 1, 4, 7, 8. Duration 32. 1, 3, 4, 7, 8. Duration 41. 1, 3, 6, 7, 8. Duration 51. 1, 3, 6, 8. Duration 38. That's your critical path. Write down. Critical path is 1, 3, 6, 7, 8 with duration of 51 days. With duration of 51 days. Let us proceed to next question. A wonderful learning curve question, very simple question. Let's begin with this question. MP Limited has developed a special product. Okay. Details are as follows. What are the details? The product will have a life cycle of 5,000 units. It is estimated that market can absorb first 4,500 units at 64 per unit, and then the product will enter the decline stage of its life cycle. Initially, we will sell at 64, and then because product life cycle will change, we will enter a decline stage. Obviously, our selling price will change. The company estimates the following cost structure: direct labor 6 per hour, other variable cost 19 per unit. Fixed cost will be rupees 40,000 over the life cycle of the product. Over the life cycle, fixed cost will be rupees 40,000. The labor rate and both of these costs will not change throughout the product's life cycle. Labor rate and other things are not going to change. Okay, during the entire life cycle, be it is decline stage or normal stage. The first batch of 100 units will be 1,000 labor hours to produce. Will take, means it's a batch question. Labor is based on batch basis learning is there. Or for first 100 units, for first batch of 100 units, 1,000 labor hours will be required. There will be 80% learning rate that will continue until 2,500 units. Means learning curve will be there till 2,500 units have been produced. Batches after this level will take same amount of time as 25th batch. 25th batch means total time of 24 batch and total time of 25 batch. The difference between these two will be considered as total time for 25th batch. This time will be taken for all future batches above 2,500 units. The batch size will always be 100 units. Batch size is not going to change, although it can change, of course. Calculate the cumulative average time per batch for the first 25 batches. We are supposed to calculate cumulative time for first 25 batches. Okay, not a big issue. We can definitely very easily calculate it. The time required for 25th batch. If average time for 24 batches is 359.4, means he has already provided us average time for 24th batch. We can calculate total time for 24 batches. We just need to calculate total time for 25 batches and find the difference to arrive at time for 25th batch. Got it. Then the average selling price of final 500 units will allow the company to earn a total profit of rupees 80,000 from the product. Remember, last 500 units are supposed to earn a profit of 80,000. Okay, he has provided us some coefficients, some log tables, etc. For example, learning coefficient for learning rate of 80 has been provided, log tables has been provided, anti-log values, etc. Okay, that's the question. Very easy question, not a big question. Calculate these three things, we will calculate it. Means first is cumulative time for 25 batches, not a big issue. Let's find it. In our book, question 18 is some of similar type only. Learning curve, yes. Solution. You are aware about the formula A x to power b. What is A? Let us write it down. First, y. What is y? Cumulative average time per unit for x batches. What is A? Average time per unit for first batch, 1000 hours. What is X? Cumulative number of batches, 25. What is B? Learning coefficient or index. What is Y? Let's apply now. What is Y? Y is equal to 1000. From here, apply all the values. Let's find it fast. 1000 into 25 to the power minus 0.322. Log Y. Let's take log. Taking log both sides. Taking log both sides. Log y is equal to log 1000 into 25 to the power minus 0.322. This becomes log 1000 plus log 25 to the power minus 0.322. This becomes what? Log 1000 minus 0.322 log 25. I hope all of you remember properties of log. What is 1000? 2 to the power 3 into 5 to the power 3. Sir, why you are finding this? Why don't you use the log table? My friends, question has provided values of log and anti-log in the question itself. Okay, and if you have read the question carefully, you must be aware that value of log 2 and log 3 and log 5 has been provided. So we need to convert everything into log 2, log 3 and log 5. Indeed, we cannot ask for a log table, separate log table in examination, because question has already provided us these values. So we need to convert 1000 into 2 and 5s. So similar is the case for 25. You will say it is log 5 to the power 2. Okay, so this becomes 3 log 2 plus 3 log 5 minus 0.322 into 2 log 5 is equal to 3 into 0.30103 plus, now let's apply these values, 3 into 0.69897 minus 0.322 into 2 into 0.69897. Okay, so our figure will be 2.549863. Our figure will be this. I have already beforehand calculated these values. These are written to me. So let us find antilog now. Taking antilog both sides. Let's find antilog. Y is equal to antilog of 2.549863. Log y becomes y after finding antilog, and we have been provided value for this 2.54 something. This is 354.70 hours. Great. Come on to second point. Let's come on to second point. Now what we need to do is we need to find the value of 25th batch, means total 25 minus total 24. Time taken for 25th batch, total time for 25 batches minus total time for 24 batches. Now we are aware that cumulative average time for 25 batches into 25 batches will result into what? Total time. It will result into what? Total time. So figures will be 354.70 into 25 minus 359.40 into 24. This has been given in examination. This is 8867.50 minus 8625.60. 241.90 hours. 241.90 hours. Last part. We were provided with 80,000 profit on last 500 units. We were supposed to calculate desired selling price. Let's find out. Labor time. First 25 batches, because for first 25 batches some price was mentioned, pre-mentioned selling price, I think 4500. For 4500 price was I think 64. So we need to calculate all 5000, means revenue minus cost, everything, and for these last 500 units we can take X price, and we will do like that. Let's take it this way. Labor for first 25 batches, it will be 8867.5. we just calculated here, These are the hours at the rate 6 per hour. Figure is 53,205. Subsequent 25 batches, 1.9 hours into 25 batches at the rate 6 per hour. At the rate 6 per hour. This is 36,285. Other variable cost 5,000 units at the rate 19 per unit, 95,000. Fine. What is the fixed cost? It was provided to us 40,000. So this way we arrive at total cost during the lifetime. Means it was not like during first 45 or something. It is total during the lifetime. Now out of total, we will first add the revenue, add the profit, and we will come at desired revenue. Out of this, that desired revenue, we will subtract revenue for first 4,500 units. We will arrive at revenue for remaining 500 units. Let's come to total life cycle cost. See, total life cycle cost. It is 2,24,490. Got it? 2,24,490. Your desired profit has been provided as 80,000 rupees. So you will say your desired revenue is of 304,490. Out of this desired revenue, revenue from first 4,500 units, revenue from first 4,500 units is 2,88,000. 2,88,000. So you will say desired revenue from subsequent 500 units. We can alternatively do it like taking the X and then matching this total revenue with desired revenue and find the value of X, as I told while starting this part. Or alternatively, you can do this way, means first calculate desired revenue, subtract the desired revenue of first 4,500 units, first revenue 4,500 units, remaining is obviously for 500 units. So this is your 16,490. Desired selling price from subsequent 500 units. 16,490 divide by 500, 32.98. It is 32.98. Got it? Question 5B. Let us come on to this question. A very simple question, basics of CVP. Let me show you what's the question. See, this question is, you will say that no concept has been used in this question, means even a IPC student can do this question if he knows basics like contribution, etc. He can definitely do this question. No specific concept is required to do this question. Just analysis of question is required, nothing else. If you can analyze the information properly, you can do this question very easily. No special skills is required. Anyhow, let me begin with this question. XFL Limited is manufacturing consumer product and doing marketing through 200 depot all over the country. Like Indian Oil, they have several depots. Same is the case of XY Limited. They are manufacturing consumer products and 200 depots are there across India. The company is considering closing down the depots and resorting to dealership arrangements. They are planning to close down depots and to start with dealership work, means let's outsource it. Let's do something like dealership way, franchisee dealership, something like that. The total turnover of the company is 160 crores per annum. The following information is given for each depot. This information has been provided in rupees in lakhs, annual turnover, average inventory, administrative expense per annum, and staff salary per annum. This has been provided for each depot. The main thing is each depot. Okay. Now, inventory carrying cost is 16% per annum, which is also the interest rate prevailing in the market for working capital finance. Means if you lend this money in market, you will earn 16%. So if you have invested this money in your depots, this is kind of opportunity cost for you. The other fixed cost per annum is 16 crores. Other fixed costs are 16 crores. Okay. Marketing through dealers, now we are talking about dealers, would involve engaging dealers for each area. The dealers will assure minimum sales of each area, for each area. This would result in capacity utilization from 80% to 100%. Right now our capacity utilization is 80%. That's why we are running revenue of 160 crore. For 100% our revenue will increase to, you will say, 200 crores. At present, company's PV ratio is 20%. Our PV ratio is 20%. The marketing through dealers would involve a payment of commission of 8% sales on sales. There will be change in variable cost because we will be paying dealers 8% commission. So obviously for dealers our PV ratio cannot remain same. We need to first find out variable cost, etc. using this PV ratio, and this is particularly to find current variable cost and other costs. Okay, 8% is our variable cost for commission. Half of the existing depot staff will be absorbed in the company. Means our 50% will be absorbed, 50% will be laid off. The dealer will deposit 3.2 crores with company on which interest at 12% per annum will be paid. Oh great. We will take deposit of 3.2 crore from each dealer and we will lend this money in market, first way, or you can utilize this money in your own business. Either way you will earn 16%. Let us say you invest it in market, you will earn 16% and your expenditure will be 12%. So you will be still earning 4%. Great. You are required to work out the impact on profitability of the company by accepting the proposal. Means we are supposed to check that whether we shall go by dealer or by depot. That's the thing. We need to calculate profit in the situation of dealer. We need to calculate the profit in the situation of depot. Nothing more than that. Let me help you finding out. See. Statement showing profitability under different options. Statement showing profitability under different options. First option is obviously dealer. Second option is obviously depot. Your capacity utilization will change. Currently it is 80%. then it will be 100%. Revenue. Your revenue will be $200 crores. Right now it is 160 crores. Let me subtract variable cost for you. Variable cost, we are aware what that PV ratio was 20%. So obviously variable cost is 80% of sales. This variable cost will be remain, because if revenue increases means sales increases. It's nothing like that only if selling prices increase, your revenues increase, means your sales output is increasing. So output is increasing by whatever percent output is increasing, obviously the variable cost will also increase by same percentage. That's why we took same PV ratio here. But just to find variable cost, because now our variable cost is going to change because of dealer's commission. Second expenditure was dealer's commission. You may call it as other variable cost. %8 of 200. 16. Let me find total contribution for you. So your total contribution will be very easy, 24 and 32. That will be our total contribution. Now we are supposed to subtract net fixed cost. Why net fixed cost? Because we are earning some profit, we are earning some income, fixed income, interest income, we are paying some fixed income, interest expenditure, we are paying some interest expenditure. So what we need to take is, instead of just subtracting fixed cost from total contribution, we need to subtract what? Net fixed cost, means total fixed cost minus fixed income. Got it? So as to arrive at profit. Less. What less? Net fixed cost. Fixed cost. First fixed cost was carrying cost. In own business, 16 lakh for 200 depot, I think this was the same. Just a second, let me check. Yes, 200 depot. Fine. 16 lakh 200 depots, 16%. Figure is 5.12. Then administrative expenses, $3.20, 1.6 lakh into 200, 1.6 lakh into 200. Staff salary, see, it will be 2.88, because you will say, how come this is 2.88? Let me explain you. 2.88 lakh into 200 for 200 depots. means 5.76 was in crores. I am talking about right now in crores was your expenditure while you were managing all depots, but now your expenditure will reduce to half. So we divide it by 2 to arrive at expenditure in situation when we are in dealership situation, because half of our staff will be laid off. Interest on deposit paid to dealers. Interest on deposits paid to dealers. So this is your interest. Other fixed cost 16 under both situations. Total is 95.68, 30.08. This is total of our fixed cost. We need to subtract what? Fixed income from it. Interest earned from market on dealers deposit. This is 102.4. So your net figure will be, in this situation it will be negative 6.72. Means ultimately your net fixed cost is negative, means you are earning something. In net you are earning in this situation, and in this situation it will be 30.08. So to arrive at total profit, we will adjust A and B. Hence, it is advisable to accept the proposal. Hence, it is advisable to accept the proposal. Let me come on to question number 6. Question 6 है, a manufacturing unit of ABC Limited has presented the following details. Average unit. This question is a very simple question. Let me tell you that this has nothing, basic level of decision making question. Still, let me help you in solving this question. Means I don't know whether 8 marks to this question is worthwhile or not. Anyhow, let's see. A manufacturing unit of ABC Limited has presented the following details. Average units produced and sold per month 2,40,000, number of workers 80, sales value, contribution, wage rate. The production manager proposes to introduce a new automated machine, due to which following changes will take place. Number of units produced and sold are expected to increase by 20%. Your number of units produced and sold will increase by 20%. Okay. Number of workers will be reduced to 60. Okay, with a view to provide incentive for increased production, production manager intends to offer 1% increase in wage rate for every 3% increase in average individual output achieved. See, number of workers 60. We will do what? We will definitely calculate the percentage increase in average individual output, and we will multiply it by 1%, divide by 3%. Decrease in selling price 2%. Calculate the extra contribution after introduction of newly automated machine and give your recommendation. Again, a very simple question. You need to concentrate very carefully just to evaluate each and everything. For example, first we need to evaluate current production plan so as to arrive at every small figure, be it is other variable cost, be it is anything else, and you need to jot it down. Then go ahead for new automated machine, and this current production plan will automatically help you to evaluate as per the changes given in the question. Means not a big thing. For example, you are aware that 240 is the current sales. You are aware that increased amount of output or sales will be 20%. You can definitely calculate it very easily. The point here is you need to understand the question. You need to comprehend the question very, very carefully. If you feel that this is a bit difficult question, you can definitely leave that question. But in examination, majorly all questions are very simple. Yes, of course, costing means AMA paper is a bit lengthy one. This paper is not simple. It's simple, rather a lengthy paper. It's not like SFM or other paper which can be completed even before 3 hours. But here the problem is length. Anyhow, let's not waste any more time and let's go and try this question. Very simple question. Question number 6A. Analysis of current production plan. Average output units. What is average output? It has been provided to us units 2,40,000. Then number of workers. I am just noting down the information which has been provided to us in question. Average individual output. We can calculate it very easily. It is 3,000 units. I don't think I need to explain how. 240 divided by 80. Now let's come on to revenue portion. Revenue. We are aware that our revenue is 60 lakh. When our revenue is 60 lakh, I don't think I need to explain that if we divide 60 lakh by 24 lakh, 2.4 lakh, our selling price will be 25. Further contribution has been provided to us. Contribution has been provided to us 24 lakh. It is 10. Figure is 36 lakh. This is your total variable cost, 36 lakh. Let's subtract wages from it. Why? So as to arrive at other variable cost, because we need to evaluate each and everything as per current production plans. That's the main base. Afterwards, because we need to do changes in these figures only, so we need to have predetermined figures Let's calculate wages. 5 rupee has been provided, 12 lakh. Very easy. Other variable cost, this will become 10, this is 24 lakh. Now statement calculating contribution after introduction of new automated machine. New automated machine. Output comes to 2,88,000. Okay. Cost 20% output has been increased. You are aware about what? Number of workers. 60 are number of workers. Average individual output in units 4,800. Average individual output in units is 4,800. Got it? See, now we need to understand what question told us. Question told us about what? It said that with every 3% increase in average output, 1% wage rate will increase in point number 3. And we already came to understand that earlier our average individual output was 3,000, I think, and now it is 4,800. This divided by this, 4,800. So it is very easy. First calculate percentage increase in average individual output. $4,800 minus 3,000 upon 3,000 into 100. It is 60%. Now let us calculate what percentage increase our wages will have. Obviously 20%, 3 into 1 upon 3. Percentage increase in wage rate, 60% into 1% upon 3%. It will be 20%. Now let us calculate everything. Revenue. Starting with revenue. See, 25 into 98%, because 2% selling price will get reduced, so it will be 24.5, and because our revenue our output is 2.88 lakh, if we multiply 24.5, our figure is 70 lakh 56,000. Total variable costs, wages, it will become 6 and this will become 17 lakh 28,000. Other variable cost 10 28 lakh 80,000. Total contribution fine. Our total contribution will be 24,48,000. Now we are aware that our earlier contribution was 24 lakh. Now our revised contribution is 24.48. So you will say question as question has asked us to find extra contribution. We will find it very easily. 24.48 lakh minus 24 lakh 48. Question has asked us to justify that whether to tell us that whether manager's proposal shall be accepted or not. Hence we will say hence manager's proposal should be accepted. Fine. Manager's proposal should be accepted. Let us come on to question 6b. Just a second. I don't know why my pen got stuck. Yeah, it's working now. Yes, 6b. A very simple question. Exactly ditto word to word copy of 9th question. I think word to word, not word to word. The only difference is product were here in question 9 of LPP in my book, and processes were there. Everything else is same. Graphical method. Let's read it fast. A manufacturer produces 2 types of product X and Y. Each of these products require 3 types of processing. The processing time for each unit and profit per unit are given in the following table. You have been provided products, processes, available capacity and profit per unit. Apply what? Graphical method. How many units of each product should be produced? Should the company manufacture per day in order to maximize profit? Let's do it. Let X and Y be the number of units produced for products X and Y respectively. Maximize Z profit. What will be profit? 5x plus 7y. Subject to constraint. 12x plus 12y is less than equal to 840. Available capacity has been provided for process 1 as 840. Then 3x plus 6y is less than equal to this. 8x plus 4y is less than equal to this. then last is x and y are greater than equal to 0. These are our 4 constraints. Let's plot them on graph. For plotting them, first find the points for each graph. Let's for each line, starting from first line, for line 12x plus 12y is equal to 840. Let's make this box x, y. If x is 0, y is 70, y is 0, no, y is 0, x is 70. Very easy. Next, for line 3x plus 6y is equal to 300. X, y, 0, 50, 100, 0. For line 8x plus 4y is equal to 480. X, y, 0, 120, x 60, y 0. Let's plot them on graph. One line will be like this, another line will be this. First line will be 70, 70, so it will be like this, and third line will be like these will be lines. Let me write the names of the lines. Just a second, my pen is stuck. I draw these lines on the basis of these points. Got it? Means, for example, let me guide you. For first line, x was 0, y was 70. See, x was 0, y was 70, and y was 0, x was 70. These 2 points. Same goes for other 2 lines as well. So I have plotted these 3 lines. I plotted these 3 lines on graph paper. Now we need to find the feasible region. We need to find the feasible region. Let's take any point. Let us say 0 0 or 4 4 or 10 10. Let's take 10 10 and let's write this point. Oh god, just a second. Yes, let's write this 10 10 in this point. In this, it will be 120, it will be 120, means total will be 240. 240 is 2, it is obviously less than 840, so you will say obviously this will be region. Your region for this line will be towards this point. Same goes for this line, you can test it on your own, and same goes for this line. You can take any point. If that point is providing a true region, means result is true, for example you can take 30 10 or 90 20, any point, any 2 point, any particular point. If that point is resulting into a true answer, then it means that particular point is lying within the region, within the production region of that line. And if it is false, for example if you will test by point 90 20, you will find that it is false. So this point is not lying within the region. If it is not lying within the region, means our region is on towards opposite direction, because if we will erroneously draw region towards this direction, I will say that this point will eventually lie within the region. But what I need is this point shall not lie within the region. That's the point. So you will say we found what our feasible region. Our feasible region will be this will be our feasible region. Now let's find coordinates, corner points of our feasible region. This will be, first point will be say A, it will be 0 50, here B, it will be intersection of two lines, this one and this one. Let's solve these two lines. These are simultaneous equations, means at this point these two will be simultaneous equations. So we will solve these two lines and we will find the point. The point will be 40 30, x will be 40, y will be 30. You can solve them. There is no need to show it in an examination how you solve them. Same is this situation. In this situation two lines will be these two, and we need to solve them simultaneously, and on solving them we will get this point. Value for this point is 50 20. This is D 60 0 0 0. These are points. So this is our feasible region. Got it? This is our feasible region. Let's find let's put these points, corner points of our feasible region in our objective function and find that which one gives us best profit. That profit will be maximum profit. I already told you in normal classes the reason why our best profit comes at corner point itself, due to some ISO profit line. If you remember, I told you entire concept of an ISO profit line. $350, $410, $390, $300, $0. This is your maximum profit situation. So you will write, hence it is advisable to produce 40 units of product X and 30 units of product Y to earn a profit of rupees 410. To earn a profit of rupees 410. ठीक है, simple. Let's proceed to our last question, question 7a. Answer the 4 out of 5 questions out of following 5 questions. Let us begin with 7a question number. Answer the following independent situation relating to an assignment problem with minimization objective. Okay, with minimization objective. See, this is the same question, question 2 of assignment hour from our book. Fine, exactly same question. Let me guide you about this question. Just after row and column minima operation, we find that particular row has 2 zeros. Does this imply that two corresponding numbers, means we have already applied row operation, row minima, column minima. Now a single, let us say one row has 2 zeros. Now question is, because these 2 zeros, let us are corresponding. Now question is whether the original values, original matrix, does this imply that two corresponding numbers in the original matrix, means before application of row minima as well as before application of column minima, means no operation was done, were equal and y? Our answer shall be no. It's not compulsory. Let me give you an example. See, sorry, gosh, for example, in this case, these 2 zeros are after application of row and column minima, means in this row, this 0 and this 0, there are 2 corresponding zeros in a row. Same is for this situation and same is for this, not for this, this. Fine. But you will find that none of the values, this is original matrix by which this matrix has been derived, you will find that none of these values are same. So you will say that it is not compulsory. For example, in this case, it was 2, it was 1. How can you say that these 2 values, just because they are 2 zeros at the end after row and column minima, these values shall be same? No, they are. It's not compulsory. They are same just because after performing row minima, for example, you perform row minima, this becomes 0 and this becomes 1. this was least, this one was least of these three values. So when I have applied column minima, this also becomes 0. This also becomes 0. It's nothing like if two values are 0, corresponding to means two values are 0, two simultaneous values are 0, then corresponding values for original matrix shall also be 0. No. Second point of the same question. Under the usual notation, where A32 means the element at intersection of third row and second column, and we have in a 4x4 assignment problem, and A4 and A32, A24 and A32 figuring in the optimal solution. What can you conclude about remaining assignments and why? Very easy. Let me explain you. Just a second. Question says A32 and A24 are optimal solutions out of this matrix, and we need to speak something about remaining two solutions. Obviously, because one allocation has been done in this row, no more allocation can be done in this row. Same is this situation of this column. Because one allocation has been done to this column, you cannot allocate any more cell of this column. Let's repeat the same for A24 as well. No allocation can be done in this row or in this column. Now we have 4 cells in remaining. There are 4 cells remaining. Obviously, let us say you choose this cell, while allocation you choose this cell. So you cannot allocate at this point and this point, because one row, one allocation, one column, one allocation. If I am saying that you already allocated at this point, you cannot allocate at this point or this point. So next allocation will be at this only. And same way goes for if, let us say, you did allocation at this point. Now you cannot allocate at this point or this point. So other allocation will be A41. So you will say either A11 and A43 will be the solution, or A13 and A41 will be the solution, because of one-to-one relationship. Got it? Very simple question. Let's come on to next question, 7b. Let's come on to 7b. Classify the following under appropriate categories of balance scorecard. Now you are aware about the categories. Page 287 and 288 of book 2 11th edition provides these categories. For example, research and development. First of all, there are 4 categories, you remember? Financial, customer, internal business perspective, learning. So research and development belongs to innovative and learning perspective. Got it? What are 4? First, let us write down: customer, financial, learning, innovation and learning. Some people call it learning and growth. And 4th one is internal business perspective. Research and development, this one, because we are doing some learning, innovation things. New product introduction, what is that? It's not kind of learning. You are doing some changes in your internal businesses. You are introducing a new product. Then price is a customer factor. Obviously, customer sees price. What price, at what price you are charging, what price is being charged to the customer. This is customer's perspective. Cost leadership, it is again innovation and learning perspective. Got it? Then sales penetration, internal business perspective. Profitability, what is profitability? Finance, sales, finance, means there is nothing to be taught about this. Quality, everything is being taught to you in class itself. Quality is customer sees the quality. Got it? Let's go ahead. C point. How would you use Monte Carlo simulation method in inventory control? Same question as question 3rd, page 149, 11th edition. Next, indicate 2 activity drivers in respect of each of the following activity cost pools. Yes, very simple question, basic level question. Of course this question is not mentioned in my book, but it's a very simple question. For example, manufacturing cost. You have been asked to tell you about 2 activity cost drivers. You can say that we can allocate manufacturing cost on the basis of machine hours, labor hours, number of units produced, or some other way as well. Human resource cost, you will say number of employees, number of training programs. There can be other ways as well. Number of training hours. Marketing and sales cost. Obviously sales revenue is the best example. You can say number of sales personnel, number of orders processed, other cost drivers as well. Activity cost drivers can be there. I'm giving just some example, brief examples. Accounting cost, billing hours, best example. You must be aware, even I taught you a question of billing hours in class, if you remember, that architect question in which there were partners, if you remember. You can use number of branches, divisions, number of reports issues, etc. as cost drivers. Obviously question will give hint, but just because he is theoretically asking, you can definitely brainstorm and think some examples. It's not like that you need to write only these examples which I quoted. You can obviously write other examples which you feel that are better examples of cost drivers. Last, what is penetration pricing? What are the circumstances in which this policy can be adopted? Again, same question, question 19, page 125 of 11th edition. You can go through it. With this, I will say that I hope you enjoyed this paper and I hope you like this. The best thing is, in this way at least we interacted. Several of you were asking me that, sir, please provide me solutions, video solutions. Reason was that they cannot understand the question or solution. The pace was, they were having several small confusions. With this kind of interaction, their intellect grows. They understand each and every perspective, because these solutions which are made by me are based on students' feedback. These are not basically my feedback, these are students' feedback. I kept in mind almost every feedback and I tried to explain every point wherein student committed error, sometimes explicitly, sometimes implicitly, by forcing on that particular line. In some situations I did not focus at all, because I believed that there was nothing to be focused. Yes, my writing speed was a bit higher in comparison to the writing speed which I uses in my class. Also, I preferred English language instead of Hindi language, or blend of English or Hindi, to record these video solutions. Reason is, my classes are now spread across India, Middle East, not only Middle East, Nepal, and in every city, every state of India, there is different language is being used. For example, some people from south were asking me to use a little more of English than in Hindi. So I prefer to record this in English, because my classes are already in blend of English and Hindi. But these solutions, because majority of students go for English medium in terms of examination, so I prefer to write these solutions, to record these solutions in English. I hope you enjoyed the solutions. With this, I would like to say bye bye. We will definitely meet in next video for next video solutions. Bye bye.